Hello guys, welcome to another video. So today we're going to look at gold. So the last video that I made, I looked at Nasdaq, and I did tell you that when you looked at it, especially on H1, that there was a potential or a very high possibility that the price was going to drop towards the H4 support, and it did exactly that. So today we're going to try and have the same view on gold. So remember the last video that I made on gold, it was about taking a potential buy from this level because of what it did when it pushed up and then the retest. Ever since this level confirmed a breakout of that trend line, we've been saying that it has a potential of pushing to the upside, and you can see it stayed here for some time, but it never moved lower than it. And then now it pushed all the way to the upside. So we're just gonna try and continue from there. So we have to start with what? The highest time frame, so that we can have a better view of what is actually what is exactly happening before we can come back to these smaller time frames and take trades. So make sure that you stick until the end so that I just show you how to do the top down approach, or breakdown of the market using the top down approach. So let's So this is what we have on the monthly chart, and we had said that in the previous video we had said that if you look, even if you scroll all the way back, you'll see that this is like the all-time high. Gold has never been at these highs before, so this is where it formed the all-time high. And let's just put a proper horizontal line so that you can see that it hasn't been broken. So this is the highest point that gold has ever reached. We tried to create a new high, we failed. We are trying again. So the question is, are we going to create a new high, or are we going to drop from there? So we will find out about that as we're drilling down to the smaller time frames. But what you need to take from this is that the price is now at a monthly all-time level. So it's only a matter of time, saying that when you try and assess it, do you see any potential of it creating a new high, or is it gonna drop from there and come back again, the same thing that it did when it tried to create a new high there? But we'll see about that. So we can see that in the previous month, this is what we formed, which is what? A candlestick that looks like this, which is what you call a bearish pin bar. And what does this mean? So this basically means that when the price reached that level, because we know that there's a lot of bears here, or there's a lot of sellers there, so that's why the bulls will we will struggle to pass that. So that's why when the price gets there, the sellers kick in and then they reject the price. So because there's a lot of sellers there, that's why we end up with candlesticks that look like this, because the bulls are trying to push up, but the sellers push them back and say, no, we are rejecting. We don't want you to move higher than this zone that we have there. So that's why the candlesticks look like this with the tails above. That's what we're saying. The bears here are the ones that are rejecting the price, but they try to reject the price when you have a bearish pin bar like this, but you fail to break the low of that bearish pin bar, then it's pointless. If the bulls are gonna go up and take you out on the other side, it's like your pin bar doesn't even exist, which is exactly what we have in here, where we have a bearish pin bar, but the bears fail to continue with that momentum and break the range of that pin bar. Now we are on the other side, which means the bulls are still so aggressive, but the question still remains, are they going to remove the all-time high, or are they going to reverse from there? So we'll find out when you're moving to the other time frames. So let's check weekly. So this is what we have on weekly. So on weekly, the same thing that we were seeing that side, which is what? The pin bar. Remember, we're having a bearish pin bar on monthly the previous month, and we had said that we are at this all-time highs there, and we are forming a pin bar, right? Even here we did have pin bars there. We were saying that there was a potential that the price could drop towards this trend line or towards the support, but the support is a bit far. So we were hoping that before I take off the price, especially on those ones that are trading the bigger time frames. But when we get to things like H4, H1, you will see that those ones that are trading there, they actually had a chance to buy there, which is what we had in the previous lesson. So here we are saying that we did have the pin bars. The location did allow us to take sell trades if you're trading on weekly, because the price is being rejected at a zone that is controlled by the sellers. So unfortunately, the sellers didn't have enough strength to push to at least the trend line. Now we see the bulls having this strong candlestick, the upside, but still the strong candlestick, I don't think it created a new high like we saw in the previous this is where we at. So it seems like we slightly moved above that. I don't know if you can see that, but it's not so convincing. It might be different from broker to broker, but we're still at that very same sensitive level there at the top. So it seems like the bulls are really trying to take it out, but it's not gonna be an easy exercise. So now let's check what we have on daily. So now we just need to understand that on this time frame that on these time frames that we've checked so far, the location is saying very sensitive. The sellers might just pull a number on you there. So let's check daily chart. So this is our daily chart, and when you check in the daily chart, currently we can see that because what we had at the time when we were recording the previous video, we had said that we did have a bullish trend line there, and the location allowed us to say that the sellers could push to the downside. But then we have the trend line being taken out and this support being removed, and then that's when we had said that this is the nearest what area of what of resistance, that what pushed the downside and broke the trend line and also took an area of support. But if those ones that I taught these lessons in full details, the ones that are in the mentorship, they know that when you have a zone like that, as much as it is accomplished, taking out the trend line and taking out the support, you still need to assess it to see if it's really a zone that is tradable or not. So when you assess this one, you will find that it's not a good zone because of what we just played there and came back. We don't have enough space as our profit margin. That's one of the reasons why this zone here, if you're someone that's trading on a daily chart, that's one of the reasons why you wouldn't want to sell there, because of what the profit margin is not enough. So now this is where we are. So we just need to say, because whatever that the sellers were trying when they were breaking this trend line and breaking the support, it all started from this high here, and now the high has been removed, which means everything that the sellers have tried, we have reversed that. The bots have reversed that. So now we just need to say we are back to being bullish, and you put a bullish trend line there, and then you just mark your support and say this is the support that we are having at the time, even though it's not so great because we wasted a lot of time there. So we've got a support there and we've got a trend line. You just need to keep in mind that where we are here, we said what? Very sensitive. So there's a chance that these guys can be pushed back. As long as they don't break that high that we marked there on monthly and stay there. If you break it and stay there, that's very convincing that you want to continue and create new highs. But if you just tail and come back to the other side, then we are not convinced. So now you can see here on daily, it's just that the candlestick is still open, but the price is being rejected, which means there's always a chance of the price being pushed back towards the trend line or the area of support. So let's see what we have on H4. So this is what we have on H4, and we have the same thing, right? So we were basically moving up, all of that changed, and we had a trend line there, and this was also removed, and that's when the price pushed down when we searched for that H1 support there, which is the one that pushed reversing the trend on this chart. And that's where we said from here you can look for buying trades. It stayed there for some time, but eventually it took off. So for now, we will say our H4 is still very much bullish, like it's very strong. If you look at this gap that we formed there and the candlesticks that we're having, very aggressive. But now this is our support on H4. So this is our H4 nearest support, and our H4 is definitely bullish. You can put a bullish somewhere around there. We just need to scroll back and find that second point. I mean this one here, to say that that's your H4 trend line. You can put it there. but the zone that we are having close by is this support, or an area of what? Of demand, or which is what? Rally base rally. So now if this is our nearest support and we are bullish, if I want to join this bullish trend, is it a good move or good idea for me to take a buy trade here? Now I want you to listen to me. So you've got two options, right? Because we do understand the trend is going up, but there's something that you cannot ignore, which is what? This is what? All-time highs. We said what? Very sensitive. So the monthly will say the location where you are, the sellers are going to try by all means to reject the price there. So if the sellers that are there are the big guys on the monthly chart, they reject the price there, chances are that you can't fight them with H4 zone, because they can just push down like this. But it's also possible that what we said, that where we said we sort of moved up or above the high by just small tail. What if this opened space for the bulls and they just want to recharge and then continue? You see? So which means you have got an option to say, it's either I'm gonna try and take my chances at this support, which means because I know that it's also possible that the sellers could be pushing from the monthly, which means they might take this out. So I can only do it with what? With confirmation. When the price gets there, if you get confirmation, you can then enter. So in terms of selling on this chart or this time frame, we don't have a reason to sell yet. So maybe when you're moving down to your H1 or M15, you might get sell trades. But here on our H4, this is where you can take a buy trade. But because of the location where we are, make sure that you wait for confirmation because of what? The location. So if you don't have confirmation, you're not going to enter. If this is taken out, then you're like, okay, I see the sellers are very aggressive. They've reversed the trend. We're no longer going up. Then you can just wait for a pullback, maybe towards a resistance, and start selling there because of what? That now the dynamics will have changed. You will no longer be going up, will be going to the downside. So just because you know that the trend is now going to the downside does not mean you should just jump in there and join the sellers. No, you identify a nice zone where you can join them and then you jump in there. So let's check our H1. So H1, there's nothing much, still looks exactly the same as H4. So here the trend line, we can put it there. We are bullish, and you can have your support there. So if you're trading H1, your eyes are on the support or the bullish trend line, but you need to remember, because the trend is going up, yes, but the location, we said what? Very sensitive. This sensitive area can just do that. So you need to be careful, which means because the trend is still going up, if you're planning to take that risk, it needs to be with confirmation. So M15, is there anything that we can use? Nothing. So all these time frames, there's nothing really. So even M15, it says there. So with confirmation, without confirmation, if the price breaks that, then you will say the structure has changed. Then you just identify the resistance that was responsible for that. Then you catch the pullback and start trading to the downside, which means you'll be having a backup from that very sensitive area. You see, so that's how you should look at this one. If you're planning on taking a continuation or continuing with this current trend or pushing to the upside, you need to be very, very careful because of what? The location. So you need confirmation for that. And then when you want to sell, if you want to say that I know the location where I'm at, I see the price being rejected there, and then I'm seeing a second rejection candlestick, and we have broken the range of that, which means there's a chance of the price pushing to the downside. You could take your chances there, but because you're doing all of this on M15, your target will be M15 area of support or the rally base rally. You'll exit there. Otherwise, you can just try and play it safe and say, let's remove this, what the bulls are trying to build there. If you break it, then I will say the sellers have won. I wait for confirmation or a pullback, then I take a sell from there. So you've got all these options. So I'm showing you all these options to say that should it play out like this, approach it this way. Should it do this, approach it this way. So this is basically how you should look at this one. I think we can end it there. If you haven't subscribed, please do so, and I'll see you guys in the next video. Thank you.